Hello, it's Cryptolyze. I hope you are well on this Monday, January 8th, 2024. We meet today to talk BTC, to talk crypto, to talk news, to talk graphics, because it's happening many things. Obviously, we are in the crucial week of ETF validation, and we are starting right away. We will start with the little tweet that was released by the SEC. In particular on January 6, 2024, in which we say, be careful, don't be FOMO regarding the various news that will arrive. What's interesting is that they had already put this no-go to FOMO several times in January 2023, on 23 January 2021, in which we had this upward acceleration of the bull market in two stages to end precisely in November 2021, where we had the cool-off. So we had started to breathe second moment. It was March 2022, where once again we had the crypto market, which was starting to rise again before unfortunately having Terra Luna, the drastic and phenomenal breathing of Terra Luna, which took us to the lower on much of cryptos. So to see whether yes or no we have to FOMO or not. But you know my position, don't forget, if you do FOMO, it's generally because you are not prepared enough and you don't have a strategy. And this is where we make the biggest mistakes. Always be very careful. Prepare yourself to be right. Prepare yourself to be wrong, especially in this week, which is going to be very important. Next, we have Arthur Hayes. For those who don't know Arthur Hayes, he is someone who is very important in the crypto space, who is, for some, a little bit perched, but nevertheless remains someone who has been there for a very long time in the ecosystem, and he defines that there is a big risk of having a 30 crash at the BTC level. So for him, it is not linked to ETFs. It is linked mainly to the Fed's policy, and that behind it, at a given moment, we will have an American economic problem, and that this crash risks being between 20 and 30 and will be rapid, and in which we will have a really powerful rebound in BTC. This is a bit of the vision that we have also had for some time, except that it is not necessarily linked to the American economy, although it still plays a fairly strong role for me. And for me, it will even be the opposite role. It will rather be the role of the rebound. Because if we have a problem linked to the Fed and linked to American banks, at that point we could have a transfer of liquidity towards ETFs, BTC, and BTC in general. Contrary to all this bad news, we have BlackRock, which explains to us that for them they are waiting for validation for Friday directly. So, on January 10th, they are not going to wait for today or tomorrow, really the last day. And it is certain that we will not be able to have validation the next day because it is the deadline for ARK. And if ARK is ever refused, there is a good chance that validation will not be done before March as things stand. There are also rumors regarding $2 billion which would be ready to be injected upon validation and upon the launch of the ETF. Well, not the validation, but really the launch of the ETF, to validate if this will be the case. Either way, we're going to have that answer this week. Is this going to be a sell the news? Will this be the arrival of institutional liquidity that has been expected since 2020? This is the question we will have to ask ourselves today, tomorrow, and the day after tomorrow, and we will quickly see the answer anyway. In terms of macroeconomics, we have relatively little news. On Thursday, the IPC core mainly, and then we will have the production loan on Friday, 12 January. Well, quite little impact on the production loan. I think that we will be in the forecasts. It will rather be the IPC core, which will necessarily be closely watched, especially since we have an SPF 500, which is in the process of retracement, to see the acceleration that we expect, because there we have a lot of imbalances. We had a very strong acceleration at the time of December 11, even to reach the 4,600, which is for me the first target of the retracement. And then we would look much further down here to look for the 4,485, and then go look for 4,300, and potentially even the 4,100. There, we would really have a retest of the effective withdrawal before leaving with this big acceleration, and once again a lot of imbalances to fill on this weekly price, so we normally have a tendency to fill these market inefficiencies. At the level of the Nasdaq, we see that we are somewhat in the same framework, in which we still have a lot of imbalances which are positioned, and for me the first target will necessarily here be the fallback on the 15,800. So for me, we are going to break the 16,000. The 16,000 are not going to hold. We don't really have any strong resistance on it. To potentially go a little lower for the 14,800. Moreover, if we quickly look at Ishimoku, we see that we indeed have large flats which are waiting in these areas. in which we could have resistance here on the 15,500, here on the 15,000 the same. We will quickly look at the S&P 500. We see that the S&P 500 is much lower. We can clearly see that we have much lower resistance on Ishimoku at the level of the S&P 500 than on the Nasdaq, which is at the same time logical given that we have an outperformance of tech. American, and we clearly see that we have an American technology which in the long term, because Ishimoku, it is always a long-term vision of big tails which are in the process of forming. And we see that the US tail on the tech is still much stronger than on the S&P 500, which also shows the strength of the potential Nasdaq. And the rebound, I think, which risks being very aggressive. For now, we will arrive at the important areas. In terms of BTC, we will have once again a week in this range that we have already had for several weeks. Since December, we have seen that we are oscillating in this range where we have small exceptions. We are going to chase liquidity, and then we leave with this candle in particular from last week, which is really very impressive. Candle. When we look at the volatility, we see very clearly, in fact, this type of candle where we have very high volatility during the week, but we closed in the same positions as the week, so overall no volatility when we look per week or even per month, and in fact we start a week like this again. The question is whether yes or no we will have a return of volatility. Normally yes, because when it arrives we are supposed to have news on the level ETFs. Clearly this type of range, this type of liquidity construction is suitable for lateralization upstream of the preparation of news. The question is, are we going to have a sell the news or a bullish acceleration? That's the only question you need to ask yourself. Validation itself doesn't exist, okay, because in all cases we know it will be validated. The only question is when. Is it will be in March? Will it be on this schedule for the next 3 days that are coming? And I strongly believe that in all cases we will have a reaction from the market which will be violent, whether downward or upward. In terms of the decline, well, it's simple. We have the bearish gaps here which were left on the CME, which are still pending, and we have a large part of imbalance to go and retest the 31,000, which is the breakout zone of 32,000 before having a bullish reacceleration. So this will be a sell the news scenario in preparation for halving. Okay, let's admit we are not in a sell the news. We do have an injection of liquidity, a very strong FOMO reaction, in which we could easily have an upward acceleration of 10. So 10 at that moment brings us, we take the current price, 10 takes us directly to 48,000, and we could even go higher, go for 51, 52,000 with almost 20 increase. Fast enough. Then we will have to look at the structuring because there we have a form of distribution which is being put in place, in which we will be able to have a form of breathing because in all cases we have sought large amounts of liquidity. Liquidity which is above the top of Terra Luna. We can see it clearly on the left, in which here we would have this breathing which would allow us to have either a retest of the 45,000 or perhaps a little lower, but in all cases a breathing, before the halving to be able to start rising again. What is the probability of having something that does like that? I think quite weak on the state of the market in general and the state of the American market as well. The injection of liquidity will not necessarily take place in a single shot. It will be distilled and it will happen over the entire year, 2024. And the further we go into the year 2024, the more we will have this injection of liquidity. Liquidity. So for me, we're definitely going to have a reaction, whether it's bullish or bearish. And even if it's bullish or even if it's bearish, expect to have a lot of turbulence, okay? It will not be something that will go straight. We will have a candle which will eventually be full. But nevertheless, in the meantime, we will certainly have something which will resemble this typology of candle, where we will have a breakout, whether bearish or bullish. Cleaning of this candle in the 2 ways before once again having a new decision. So there, it will always be conducive to being liquidated, so always be very careful. No leverage on this type of news, no leverage with this type of volatility if you are not a specialist or if you are not used to managing what is happening. So in the very short term, we see that we still have our resistance on our low ranging, which is positioned here. For me, my sell-off zone that I will closely monitor in which we can have a retest here, and a liquidation of all pending liquidity. We can clearly see that we have a lot of people who are precisely at this crucial point, which has been left at 44,400, 44,500, in which we are going to hop here for liquids. If we position ourselves here, that means that we liquidate all of that. So we potentially position ourselves to fill the small imbalance that remains to make a sell-off. That's a bit of the idea, if we ever get there. It's a setup that I'm going to look for because overall we're quite low in terms of risk. And if we are ever going to position ourselves here, there I will look to see if we are on a price which is relatively weak or not. For what? Because here we are in the process of liquidating all the longs. We can clearly see, once again, if we return to the liquidation map, we can clearly see that we have liquidated the longs once, twice, 3 times. We still have a little long to liquidate in this part. But aside, when I look, I see that I have a CVD spot, which is in the process of rising. So potentially we are trying to anticipate on the spot the purchase on the news, therefore the validation of the ETF, therefore, which would be rather positive. So this is a bit of a positioning that is being done. We have a little bit of liquidity to go for a long time here on Kingfisher. One and the other tells me that if we ever arrive in this zone here, we will certainly have an upward reaction between 42,000 and 41,500, in which it will be necessary to decide at that time the general state of the market in relation to the announcement, because this is what will drive the market this week. We can make plans on the comet in the short term. Nevertheless, we are waiting for a bullish or bearish event, and this event will be so strong and so anticipated that we risk having hyperspeculation even 48 hours before the potential validation of the ETF or the potential refusal of the ETF. The closer we go to January 10th, normally the more we are supposed to see an increase in volatility and increased manipulation with erratic price movements. So always be very, very careful. Order flow. Not much to say. We are really relatively flat on open interest. So we see that we are waiting for the arrival of the announcement, and the probability that we stay on something flat like that at the opening of the American market still remains very weak. That's it for today. I hope you liked this video. If so, don't forget to leave me a like and a comment, and we'll see you at 13:30 for Ethereum.